Hi there, this is Attila Yeşilara. I need to check the sound once again because I had just shot a 15-minute video where there was no sound. Imagine my joy. By the way, you're at Real Turkey channel. You are in our newly redecorated home studio. As we see, we have a new curtain that doesn't block the sunlight. We have a fake, bookcase panel behind us. It's been costly. It has been costly. The total cost is $39.99 plus shipping and handling. Talking of cost, today we're going to talk about the potential cost of the Ukraine crisis to Turkey. It's 30 billion American dollars, not Nigerian dollars or Canadian dollars. That cost was estimated by Turkey's leading economist, Mr. Mahfi Eğilmez, in his blog, which I'm going to show here as resource, and you can check the link below if you speak Turkish. I had also calculated the cost in a somewhat different manner, but I had independently arrived at 35 billion. And I checked for with a few economists. Obviously, everyone has different assumptions on how each variable that makes up the national annual income will behave in a crisis like this. But this is a reasonable ballpark figure. And to put it in a perspective, $30 billion is roughly 4% of Turkey's national income. So Turkey was expected to grow roughly 3.5% this year. If this Ukraine crisis turned out to be as bad as we Turkish economists largely think, then we will have stagnation or stagflation because inflation is at 50%, whereas we get no GDP growth. And you may wonder, I mean, if you look at the map, Ukraine is right across the Black Sea. We're separated by a fairly big inland sea. Why does it cost so much to the Turkish economy? Well, the answers are A, Russia and Ukraine are some of our leading trading partners. Two, they send Turkey heap loads of tourists. Three, Turkey is highly dependent on energy imports as well as, metal imports, mineral imports, and for the last few years, because of mismanaged farm policy, also on agricultural imports. So the import bill rises and Turkey gets into mess. I don't want to talk too much about the Ukraine war. I have shot two videos about that. The first of them is titled Ukraine War, Turkey's Collateral. The second one talked about electricity price hikes and electricity shortages Turkey because of the energy rally driven by Ukraine war and of course the daily sanctions that are currently being imposed on Russia. I also called Mr. Mahfi Eğilmez the leading economist of Turkey, which could be contentious or pretentious, but it's not my personal judgment. I simply go by social media followers. Our hero, our king, Mr. Mahfi Eğilmez, has over 4 million, I believe, Twitter. I have only 415,000 or so. So I want to grow up to be Mr. Mahfi Eğilmez. Let's get back to our subject. Let me give you how dire it is for Turkey by citing a few. Last year, Turkey imported $50 billion worth of coking coal, coal, natural gas, and Brent oil. In the first 2 months of this year, the trade data shows that the cost of these imports rose by 128% vis-a-vis the last year. So let's take the 50 billion figure and apply the 128% increase. Turkey's energy import bill will rise roughly from $50 billion 2021 to over $100 billion, $110 billion year 2022. That would of course massively expand the current account deficit. But that's not all. I have itemized costs here, but I didn't assign specific values to them because every economist's view changes. It depends on, I mean, Obviously, since we import a lot of Brent oil, our estimate of the annual cost to the Turkish economy would vary depending on whether Brent will average $175 per barrel this year or $200 per year. But itemizing is simple. A, the hit or the shock to the Turkish economy comes from a higher import bill. Energy and commodities. We also import a lot of nickel and aluminum from Russia and junk steel from Ukraine. Uh, we, for instance, have to import something like 12 million tons of wheat this year. The price of a commodity which had recently reached 14-year highs. We import all of our needs for sunflower cooking oil from Ukraine. So this costs add up. So the first portion of the $30 billion cost is this rising price of commodities, but also lower exports. I mean, we import roughly $12 billion worth of goods and services, Russia and Ukraine. Ukraine probably won't be able to import much until a renovation effort starts when this war is over. I'm sorry. Here we go. Russia's imports will decline somewhat. First of all, there will be difficulty in making payments, as you know, SWIFT is the national payment messaging system, and Russian banks have been largely banned from accessing it. Also, the Russian people have suddenly become extremely poor. I didn't check the exchange rate today, but before the crisis, dollar ruble exchange rate was somewhere around 80. Now it's something like 120. So in a span of 2 months, in dollar terms, Russians became 50% poorer. For illustration purposes, none of these is the accurate economist calculation. I'm just simply giving you examples. Also, tourism was supposed to play a major role in Turkey's sustainable recovery this year. We expected $35 billion of gross tourism income through spring and summer. Now, Mr. Mahfi Eğilmez claims that the losses because of Russian and Ukrainian tourists not being able to travel Turkey, something like $50 billion. I put it at $3 billion. I put the brand cost at a higher level. All depends on assumptions. But nowadays I'm changing my mind and gravitating towards Mahfi Eğilmez's higher uh, cost estimate simply because I didn't think Russian tourists would have payment difficulties. But Visa and MasterCard had shut down Russia, if I understand correctly. So imagine you're a Russian tourist, like most of us, you hold a Visa or MasterCard issued through your local bank. You want to book a reservation to Antalya, Bodrum, Istanbul, and it's not working. It says payment refused. So, you know, we really we don't have travel agency. Don't know how to go to a physical travel agency store and book a trip and pay cash. So these costs are very prominent, very prominent, difficult to avoid. But there are other costs as well. One of them is the weaker currency. Obviously, all emerging nations' currency are declining, but Turkey is declining because there is also panic from the retailers who are once again rushing back to hard currencies. This has happened in December, and to stop the run on the Turkish lira or the panic in the exchange rate market, the government invented this brilliant scheme called FX Protected TL Deposit Insurance Scheme, which has collected 500 billion liras worth of deposits. The scheme, let me illustrate with a simple example. Attila Yeşilara put 1,000 liras in a bank at a 16% interest rate per annum. At the end of the year, first I will get my principal plus 16% interest. I am also in the FX protected Turkish lira deposit scheme, and dollar appreciated by 30%. against the Turkish lira. In that case, I would get the dollar's appreciation against the lira as insurance payment. But put it this way, suppose 500 billion liras are insured under this scheme and the average interest rate is 5%, and dollar appreciated by 30%. So the 15% will have to be paid from Treasury or the central bank, the technical matter. But 15% of 500 billion liras is 75 billion liras, which is something like $6 billion, or roughly 1% of GDP out of Treasury's coffers. And that, of course, comes back to me as a taxpayer. But there are other items which are scary. We may not be able to borrow sufficiently from abroad, pay off our maturing debt, and to cover the rising current account deficit. Turkey has roughly $115 billion worth of foreign debt maturing in the next 365 days, plus presumably another $50 billion worth of current account deficit, which comes on top of maturing debt. So our annual foreign borrowing or financing need roughly $210 billion. Let's suppose, since Turkey has a single B rating, and it may be technical again, but Turkey's CDS, default swap risk premium, over 700 basis points, foreign banks did not want to lend to Turkey to finance the current account deficit. In that case, the bank or the importer will simply go to the central bank and say, hey, here is my Turkish lira, FX. I have to make a payment abroad. There is a saying in economics that all unpaid private sector debts end up on the central bank's balance sheet, because central bank is the lender of last resort. I'm sorry. So to the extent we have difficulty borrowing from abroad, we'll have to reduce our expenditures at home. Credit will become more expensive because it's not replenished by foreign flows, and that's also going to reduce the economic growth rate. And there is going to be even more pressure on the currency, simply because if let's say $150 billion of foreign debt in a usual normal year, I would have borrowed all of that $150 billion again. But now, because of the Ukraine war, Turkey's weakened economic situation, cyclic currency, I can only borrow 80% of what I have to pay off this year, which means Turkey has to find $30 billion to redeem part of its maturing debt. And that's a huge toll on the economy. So these are the costs of the Ukraine war to Turkey. Once again, I stand by the brave Ukrainians who are defending their honor and their country and their livelihoods. And I pray to all gods and goddesses that this war will be over soon. Also, this week is Women's Day. I salute all the women of the world. I don't believe in gender equality. Men and women are not equal. My experience, women are far superior. Okay, thank you very much. You have watched another broadcast by Real Turkey channel presented by Atilla Eşilada at our renovated studios. Soon.